Got a rally to start your holiday shortened week. Isn't that nice? Just 30 minutes to go until the start of cash trading. I'm Dani Burger. Bloomberg Open Interest starts right now. Coming up, tech bounces back as South Korea's AI spending push gives chip stocks a boost. Comcast shares soar on a plan to spin off NBCUniversal and Sky into a new media company. Plus, the U.S. and Iran agreed to halt attacks after days of escalation. Talks in Doha are set for tomorrow. And by the way, news of those talks coming just hours before the opening trade. So nice for the fighting to only happen when markets are closed. Chip stocks, they're trying to rebound after Friday's big sell-off in the Philadelphia Semiconductor Index. It dropped 5%. We had 5 straight days of selling last week, despite Micron trying to come to the rescue. There's also news of South Korea planning an $800 billion investment from SK Hynik and Samsung to maintain its standing as an AI hub. So Nvidia and SanDisk are up, Micron slightly weaker. Let's head on over to the desk, though, because joining us this morning to talk all things tech and the narrative of the moment is Mandeep Singh, our Bloomberg Intelligence head of global tech. Mandeep, good morning. Thanks for joining. It does feel like the narrative has somewhat shifted, at least last week. Some Mag 7 is now in a correction. Chip stocks, even with Micron, didn't get enough big of enough rally. To you, has something changed in recent weeks?
No, I think sometimes, things take a breather. And in this case, Micron probably had results that surprised some people in terms of the upside. And I look at it this way, Micron talked about signing supply chain agreements with some of their big hyperscalers. SK Hynix and Samsung are the other 2 big players. There are people who are asking, why aren't the hyperscalers signing agreements with them? And, the news sort of makes sense that for SK Hynix and Samsung to expand capacity, they are getting the government backing that's saying, OK, we expect you to invest up to $800 billion with the assurance that if this market were to change in terms of the dynamics, and these guys have been burned before, then you have the backing of the government in terms of capacity expansion. So all in all, everyone wants to lock in capacity and pricing without really having to pay up prices, which was the case this time around with Micron.
I mean, does the timing align okay? The fact we're getting these huge outlays of just how much these companies are spending at the same time that a conversation is happening right now for corporates. Maybe don't spend as much, maybe use open source modeling, curtail some of the costs. Is there a timing mismatch in all of that to have this type of spending while that conversation's ongoing?
Well, given a lot of the companies anticipated this, especially the model providers and the companies in the supply chain, it's surprising that they didn't expand capacity up until this point. And now we are looking for workarounds, with open source models. And even with open source models, by the way, you still need memory, HBM. So it's hard to find, how you fix that given the constraints we are in, especially on the memory side. So from that perspective, you want to know when will that new capacity come online. And even with these big numbers, nothing new will come online before second half of 2027 or 2028. So we will be in this mode for a while, given the demand far outstrip supply.
How are you just thinking about government involvement? Obviously, South Korea pushing for their local market to be a winner, and at the same time, reports that Anthropic has reached some sort of agreement with the White House to unleash their highest level of model that they had, that the dispute was over. Just how big of a hand is the government playing in all this going forward?
I mean, it's huge. I think every sovereign wants to develop their own AI. That has been a priority for pretty much every big sovereign out there. And in this case, the South Koreans are actually investing their own money, which we have all seen how much TSMC has benefited from Taiwan's involvement in terms of building, the fabs that they have done over the years. So from that perspective, it's not surprising for me to see, the sovereign involvement here.
Mandeep, great to see you this morning. Thank you for joining on this Monday. Bloomberg Intelligence head of global tech coverage, Mandeep Singh. In deal news this morning, Comcast has announced plans to spin off NBCUniversal and Sky. It will be a new media unit and separating it from its telecom business. Let's discuss with Bloomberg's Kelsey Griffiths. Kelsey, this isn't the first deal in recent times that Comcast has done, spinning off the Versant unit. What has been the thinking behind spinning off NBCUniversal and Sky this time?
Well, I was just listening to the investor call as Mike Cavanaugh and the Comcast executive suite gave us some updates on why they're doing this. And they've said, look, we have multiple businesses that are really just focused on different priorities. For a while, scale seems like the best option. Now that we've seen the media businesses and the broadband business get more competitive, it seems like it makes more sense to split those companies off and focus on them each doing what they do well individually.
Does some aspect of this also just have to do with the value of these media businesses? I mean, Versant has declined about 21% since it was spun off. I mean, might NBCUniversal and Sky meet a similar fate, Kelsey?
Now, that's something that I think we're continuing to look at. Overall, Comcast has definitely been sort of struggling with their share price, especially over the last year. If you look at the broadband business, which is kind of my area of expertise, they've also been trying to look at how they can stem some of these customer losses. And yes, they are just deciding that a different structure makes sense here for the financial good of the business.
It does seem to be in just the telecoms, a variety of deals. I mean, there's Verizon this morning with BT. What was that about, Kelsey?
Now, Verizon, maybe somewhat similarly, is looking to do what they do in the U.S. really well, and then to partner with BT on these international businesses. Verizon doesn't have the consumer wireless business internationally that we think of them having here in the U.S. So they're really looking for that partner to help them keep some of their private networks, some of their cybersecurity businesses, and some of these other things that they sell to enterprises going across the globe.
Kelsey, thank you very much for that. That's Bloomberg's Kelsey Griffiths. Let's turn to oil now, with Brent crude hovering below $73 a barrel after President Trump said that Iran has requested a meeting. In a Truth Social post, he said the meeting will take place in Doha tomorrow. Joining us now from Washington is Bloomberg correspondent Tyler Kendall, who covers the White House for us. Tyler, I mean, again, over the weekend, it seems to be a pattern. Over the weekend, escalation, and then before trading starts, de-escalation.
Right, Dani. I mean, at this point, it really does feel like repetition, though we're tracking now that there will be these planned talks later this week after we were supposed to see negotiations in Switzerland over the weekend, but they stalled because of what became the worst flare-up in fighting since this memorandum of understanding was signed. Now, President Trump says that Iran requested this meeting. We should caution that we haven't heard from the Iranian side quite yet. In fact, Iranian state media this morning disputed that there are any plans for talks this week. But still, it appears evident that the two sides are trying to work out some differences when it comes, of course, to the Strait of Hormuz, because this flare-up in fighting really seemed to be tied to vessels starting to transit through, including through a corridor backed by the U.S. that hugs the coast of Oman. And apparently, that's not the route that Iran wants to see. Instead, they want ships to transit closer to their own coastline. Now, we'll have to see where this goes from here. We heard from Iran's foreign minister just yesterday saying that Iran maintains full control over the strait and has the sole authority, in his words, when it comes to managing the strait, something that the U.S. disputes would be in any sort of deal. Even with the flare-up intention, Dani, we did still see vessels transiting through. There was a drop in observed transit, according to data analyzed by Bloomberg News, but still those traffic levels remained much higher than they were amid the height of the conflict.
Well, Tyler, what does it mean for the talks in Doha? I've seen them described as technical talks. Does that mean what we might get out of them is somewhat minimal?
So technical talks, Dani, are really focused actually at the export level. This is where they're trying to implement exactly how enforcement mechanisms would go into place, how timelines would really be implemented. This is where we get actually more into the nitty-gritty of the details on kind of the broad strokes that the leadership level was trying to work out here. But it becomes very evident that the Strait of Hormuz is going to be dominating these conversations. Keep in mind, this is, of course, supposed to be the second phase of the negotiations. The first phase is that the Strait of Hormuz is supposed to be reopened without any issues or impediments to these ships transiting through. And this dialogue for this 60 days is supposed to be focused on those potential curbs to Iran's nuclear program. But amid what has been trials and tribulations with the waterway, it is very evident that they need to work out some other mechanisms here. Dani, as you well know, both sides said that they were going to establish a line of communication. It was dubbed the Hormuz hotline. It appears that that isn't yet quite in place. So perhaps some of the mechanics of how that communication is actually going to work could be a feature of those discussions if they happen later this week.
Tyler, thank you very much. That's Bloomberg's Tyler Kendall in Washington. A quick check on markets this morning, 20 minutes ago until the start of your cash equity trade. And we rebound this morning. We buy the dip in tech. Mag 7 having entered a correction, now down 12% from its peak after 5 straight days of losses for the S&P 500. That's the first time we've had 5 consecutive days that we were down since August of last year. 10-year yields, those are a little changed as Brent crude does move higher. We're just hearing from Tyler Kendall there with it seems talks are ongoing and maybe we've agreed the Iran and U.S. to stop firing at each other at $72 a barrel and 55 cents. Let's get a look at some of the individual name movers on our radar this morning. With that is Isabel Lee. Isabel.
Hi, Dani. Let's take a look at Rocket Lab. The company is buying satellite communications from Iridium in an $8 billion deal. So the combination will help Rocket Lab's goal of becoming a vertically integrated space company. Up next, we're looking at Charter Communications. You can see here the shares are popping higher by 25%. So the company is soaring on the back of Comcast's planned spinoff, as well as Bloomberg's report that Charter is in talks with SpaceX for a potential mobile phone offering. So that's a nice pop right there. And lastly, Microsoft also green, up by almost 2%. They're heading for the worst months since the dot-com era as investors felt really a lot of concerns and nervousness about how software giants will fit into the AI world. It has really raised more than $570 billion in market value in June, but today's looking like a good day, but maybe that's just today. Back to you, Dani.
Yeah, it might just be today, considering they're down, I think, 20% from their high. Isabel, thank you very much. We'll catch up with you later. But first, coming up on the show, New York Stock Exchange owner ICE is adding new futures contracts tied to events as Wall Street leans into prediction markets and tries to hedge a changing Fed and changing geopolitics. That's coming up next. This is Bloomberg. Let's get you some high interest stories. A look at what's making headlines around the world. With that is Isabel Lee. Isabel.
Hi, Dani. We're looking at a strong aftershock rattling Venezuela today as rescue crews continued searching for survivors after last week's deadly twin earthquakes. The 4.6 magnitude tremor sent residents fleeing to the streets of Caracas. Officials say at least 1,450 people have died, thousands remain missing, and more than 2,600 rescuers from around the world are on the ground. And Google co-founder Sergey Brin took a steep hit on New York's real estate, selling his stake in a rent-stabilized apartment fund for just 6 cents on the dollar. The investment soured as rising costs, rent caps, and mounting legal troubles hammered landlords across the city. And Millennium Management is launching an AI lab to speed adoption of cutting-edge artificial intelligence across the $89 billion hedge fund. The lab will test new AI tools, partner with AI companies, and recruit top talent as Wall Street races to use AI to improve research and investing. Dani, back to you.
Isabel, thank you very much for that. Elsewhere, NYSE owner ICE is adding new futures contracts for traders later this summer. They will be tied to global monetary policy decisions and U.S. natural gas storage, as ICE tests institutional interest in event contracts. Joining me now is Wall Street chief correspondent Sri Natarajan. Sri, how much of this is, maybe you want to hedge the central bank decision or just ICE trying to get into prediction markets?
Well, a bit of both, right? You have seen the massive growing popularity of these prediction markets, of these binary contracts, the yes or no events. Now you're taking that core appeal of prediction markets, those betting markets, and repackaging it for Wall Street, making it regulated, making it centrally cleared, and giving investors a pure play hedge, a way to deal with the big events that shape financial markets. That is, critically, when you think about it, the big central bank decisions. And we're talking about the Federal Reserve, the Bank of England, the European Central Bank. And also when you have the EIA gas storage number, ICE is saying we'll also give you an opportunity to do that. Up until now, if you had to hedge these events, you had to look for proxy instruments, which were good, have been popular, have been used, especially if you think about the CME complex. Now, this from ICE is a direct challenge to that. They're saying, ignore the proxy instruments. Let's make this a direct pure play action. It's a yes or no event, and this could be a way to draw big institutional investor money. And just to strip it back a little bit, if you think about the growth of prediction markets as the appeal being in, say, sports investing or betting on sport events, the real money, however, might be in the financial events, in the institutional investors being drawn to these products, and that is what ICE seems to be going for here.
Do we have any idea of how many institutions were already using some of the polymarket bets? Because it makes sense. You could know what some big event is going to be, but you don't necessarily know the market reaction, so it's hard to find that clean proxy. So has this already been widely used among institutions? Is this just trying to grab market share, maybe not from other futures markets, but from polymarket?
I think it'll be fair to say that institutional investors have been curious, but not really active, because they don't see the liquidity, especially for economic event-based contracts. Yes, there's a lot of interest in sports events and some of the other political events where you've seen big volumes on platforms like Polymarket and Kalshi, but not necessarily for economic events, not in the kind of liquidity that would draw the biggest players. But you could so easily see when a product like this is rolled out, it could draw in the big market makers. People like Citadel Securities and others would want to jump into a market like this because it is an extension of the kind of services they offer to investors anyway. They would like to sit in the middle of these markets.
Yeah, and for what it's worth, I mean, someone like an AQR has talked about being interested in trading polymarket, so maybe to your point, this is an easier way to do it. You did, though, mention it's particularly interesting. We were talking about this in the break, that ICE is doing this because they have an investment in polymarket, right?
Right. It's a two-pronged strategy. They made a massive investment, nearly $2 billion in polymarket, betting on the growth of that platform, which, mind you, is facing a lot of regulatory challenges. It's not even available in the US, but it is focused on a retail crypto native audience. And on the other hand, this is for a pure onshore Wall Street, centrally cleared, regulated audience. So ICE is playing both sides of this and is betting that if either one takes off, it's a big win for them. If both of them take off, it's a home run.
What an interesting story. Thank you for bringing this to us, Sri. Really appreciate it. That's Bloomberg Sri Natarajan. Coming up, hedge funds are dumping certain tech stocks at the fastest pace in a decade. Lazard's Eric Van Nostrand weighs in next. This is Bloomberg Open Interest. Hedge funds are trimming exposure to some areas in tech. Net selling of IT and communication stocks jumped last week by the most in over 10 years. That, according to Goldman Sachs' Prime Desk. More broadly, global stocks saw the largest net selling in 3 months, with both short and long sales driving the move. Joining us now is Lazard Chief Investment Officer Eric Van Nostrand. Eric, great to see you. Thanks for joining.
Good to see you.
It does feel like something has changed in tech. Mag 7 has been chronically underloved in the past few months, down more than 10% from their peak. Microsoft, Meta, those are in a correction. Has something changed for you in the way you're looking at some of the big tech players?
Yeah, I think what we saw last week, Dani, was the first real pause that the market has taken on some of the AI enthusiasm in upwards of a year. We saw a few important developments in AI space kind of coincidentally come together last week. We saw the market really reckon with the bottleneck that's happening in memory for data centers and for model development. At the same time that we saw a lot of headlines about some of the big AI spenders, companies like Microsoft, starting to shift toward cheaper models, starting to shift to maybe a token minting type philosophy as opposed to the token maxing of the first half. And I think all of that gave a bit of a pause to the narrative in a way that I think we'll see more of over the course of the year.
The narrative is also interesting because it's not just the equity and what they're building, but it's also just how this stuff gets financed. And obviously, Lazard as a whole has been at really a critical juncture of that. You've had so many companies come to market. SK Hynik wants to list in the US. You had SpaceX, but then you have OpenAI delaying their IPO. SpaceX bonds are now trading at a discount. Is financing going to come under stress too, at least when it comes to public equity and credit?
I think that's certainly what the markets are reckoning with right now. What we're seeing is it's a very new kind of, not just technology, but it's a very new kind of market feedback that investors are struggling to figure out how to deal with. Most financial market watchers, most people in my cohort spent their whole adulthoods worried about aggregate demand. And like, our government's going to stimulate enough to get out of this recessionary hole? Are consumers and businesses going to spend or invest enough? enough. Most of the uncertainty today is different. It's about supply. Is the productivity shock from AI going to be as real as some of the optimists think or not? And what we saw last week was a little bit of a pinprick in that enthusiasm. Now, at Lazard, we still expect the technology to be radically transformative. It's transforming the way we work day to day, as I know it is for everyone across the industry. But I do think there's a tension between the really enthusiastic multiples and valuations in some of these asset prices now.
Is it just a timing issue then of like, are you getting a return on investment for these AI companies soon enough to allow an equity market to reward them?
I think markets get confidence from using historical data to make forecasts. And in AI space, we don't have that historical data.
True.
So the pricing that economists and traders have to put into their models for how much money these frontier model producers are going to make over the coming years, it has to be necessarily based much more on speculation and intuition and creativity than in conventional industries. That leads to more uncertainty, and when you get a little piece of bad news, that leads to a bigger negative reaction.
Your CEO, who I spoke to, has been really great on this, that like there have historically been technological disruptions, but this is the quickest and fastest one we've gotten. So how do you handle that? How do you think about where to invest for the long term if we don't know what things will look like in 5 years' time?
Well, in my view, Lazard's an active management shop. Our business model is predicated on our ability to understand the world a little bit better than our competitors, see what's coming around the corner in terms of how these companies are going to develop. And for that kind of a business model, I think this is the perfect it's the perfect canvas for us to really think bold and creatively about how these companies are going to operate. So we're thinking about the financing angle. Who is it that's extending credit to these producers, and where are the places that are going to benefit from the technology that aren't the super headline sexy names that are producing the expensive models today? Because as we're seeing with some of these open source Chinese models, there's less confidence that the same models are going to continue to dominate the landscape. The model layer might be less important than we all think.
It's so interesting to look at like the most latest release of one of those Chinese open source models, basically like hitting a lot of the same metrics as the best from here. Eric, you're going to stick with us. We have more to discuss and the opening bell coming up, and a quick check on markets ahead of that. We are looking at a rally after 5 consecutive days of losses, the first time that that's happened so far this year. On the other side of this break, your opening bell. Just moments away from the start of your cash trade. You're watching Bloomberg Open Interest with me, Dani Burger. Matt Miller is off. It's a market that is trying to find its footing. We are buying the dip, and what a dip it was yesterday. 5 consecutive days of selling. Interesting to see things like small caps and equal weight outperform as tech drags us down, but rebounding in tech this morning, kind of the opposite of what we saw last week. The Nasdaq up nearly 1%. As the S&P is up 0.7%. Some interesting bell ringers down at the New York Stock Exchange. We see Del Monte. They are the produce company, and they are merging together their fresh business and their packaged business. The CEO at the front of the podium, and we will be speaking to him in the next hour, so we wish him a safe travel as he goes from the New York Stock Exchange down here to Bloomberg's offices. Over here, I'm guessing this is a flight hanger and not the Nasdaq. We will see the Nasdaq in a moment. There you go. It is Honeywell Aerospace. Some more deal news there. They have just spun off from Honeywell. I talked to the CEO about this. They have been very busy spinning off non-core assets, and the CEO of Honeywell Aerospace will be joining the close. So some exciting bell ringers. Let's look at some of the individual names this morning. Because we were buying the dip in NVIDIA, that stops. We're still down 0.1%. And look at Micron, down nearly 2% despite the entirety of the Nasdaq bouncing back. Again, this real angst over the AI trade does not seem to be going anywhere. We were just talking about Eric with that. And then also looking at Comcast this morning, that's up nearly 11%. It has announced plans to split its media and telecom business next year. So NBCUniversal and Sky will be pushed to the side, and Comcast remains. Again, that's up almost 10%. Let's head back over the desk. Still with us is Lazard Chief Investment Strategist, Eric Van Nostrand. Eric, so we were just talking about, again, the wobbles in the tech trade. But the other thing that seems to kind of have lost its punch is something that was dominating, and it's headline risk, specifically around Iran and what the price of oil is doing. It seems like it's confined to the weekends at that moment, but I just wonder if we are at $70 a barrel for oil, if just the headline risk doesn't matter as much anymore.
Yeah, look, I think the Trump administration and the general policymaking community around the Iran war has done a pretty good job convincing markets that there's nothing much to see here on the supply shock front. And I just think that's out of touch with the economic reality. I think even as we see the tensions ease meaningfully, and I'm as encouraged as everyone by each round of apparent truce or ceasefire, but it seems like we've been through a lot of them now.
Yeah.
This is still unequivocally the biggest supply shock of our adult lifetimes.
Why aren't oil prices showing that then? Why is there still this disconnect?
I think markets tend to move on short-term psychology. And I think the positive vibes around the traffic in the Strait of Hormuz looking a lot better than it did last week compared to the weeks before has a lot of people speculatively positioning for cheaper oil. I think what they're generally overlooking is that price of crude oil in the Gulf is not the same thing as the price of retail gasoline in Ohio. And what's happened over the past couple months is inventories of gas have been drawn down substantially over the past couple months to keep retail gas prices in the United States and in Europe and in other developed economies from skyrocketing further. Now we're operating in a world with lower inventories, so less cushion for oil producers to manage. So every incremental piece of bad news in the Gulf is going to have a bigger downside impact on those prices.
So even if we were to reach some sort of truce and you get shipping moving through the Strait of Hormuz, and I'm assuming here that it moves through not at 100%, but slowly inches our way back up, what is the timeline then, or a catalyst that creates the paper markets, forces the paper markets rather to reflect the physical markets?
Yeah, and look, I think that would be good, to be clear, and it would help moderate the oil price outlook from where it stands from here. But what you're likely to see in the near term is narratives around producers and gasoline retailers in the United States who are inventory constrained, even as that traffic through the Strait starts to slowly climb up, because they used up all their cushion. They used up an awful lot of their cushion, insulating consumers from the past couple months. And if you were to double on top of that, another pause like we saw 2-3 days ago in the market's confidence in the peacemaking process, then that's going to be a worse outcome for markets than the last round of tension, because now there aren't any inventories to add some cushion.
Well, markets have started to back off the most extreme rate hikes that were priced in. And in large part, it's because of this. We're going to hear from Chair Kevin Warsh this week from Sintra, who's probably going to do his best to say nothing, given how the Fed decision went last time around. What are you expecting, and what are you looking out for?
Well, obviously, it makes sense that the market should be looking for fewer hikes than they did a couple weeks ago, given how much we've seen the oil price come down. But my basic point here is that we are not out of the woods for inflation-related supply tensions in the oil market. And I still think we're going to see a conversation both about domestic oil prices, but also about monetary policy and interest rates in the United States that veers in the direction of tighter rates to combat an inflationary problem that we're not through yet. I think the Fed will talk about looking through this as a supply shock rather than a demand shock, to go back to my earlier point.
Sure.
But I still think there's a little too much optimism in markets right now that we're just out of the woods on inflation in a way that's disconnected from the economic reality.
What should be pricing that in? Is this a bond market story, or do you think equities, again, we sold off yesterday, but having nothing to do with inflation, do you think equities are a problem where they are right now, too?
I think bond markets are actually a little closer to the mark in terms of the historically high levels of long-term interest rates that we've seen on U.S. Treasury debt and other global sovereign bonds. I do think are reflecting some expectation of more geopolitical disruption and persistently higher inflation globally. But at the same time, I think equities, in large part because of our first conversation on AI optimism, are starting to look through some of the inflationary risks at their peril.
I just wonder, again, going back to Sintra, because we are used to more than 15 years of deciding how we should react to macroeconomic data based on what the Fed is telling us. We really use them as a guide. That's disappearing. Is there a risk that the market still tries to do that it overinterpolates something that Kevin Warsh says, or it takes a piece of data and runs with it because it assumes something that is no longer assumption? Just like kind of how new of a world are we living in and trying to get a market reaction from different macro data? Yeah,
it's a great question because it goes right to the point I started with about demand and supply. The Fed, I love watching the Fed as much as anyone. I grew up a Fed watcher.
Really,
I still am. They're a lot of fun. But they are not the be-all and end-all of everything. Their mission is demand management, price stability, and full employment. And both of that involves tweaking aggregate demand. The big themes we've been talking about today are mostly about changing supply shocks that the Fed doesn't really have the toolkit to engage with. I think Chairman Warsh knows that. I think he's made that clear in a lot of his public remarks coming into the job. So we should expect monetary policy to explain less of the variance in market outcomes than we're used to from the past couple decades.
Eric, just lastly, and just to end it on the AI point, because we've been talking about how dominant of a force it is in equity markets. I wonder, as these hyperscalers turn more to bond markets, does that present an issue when you're putting together a cross-asset portfolio? That all of a sudden, corporate bond markets are starting to look more tech concentrated, and perhaps there are sort of less of ballast or less offsets to each other as they once were?
It's the right question, and it does reflect, I think, the changing nature of the way these hyperscalers are financing themselves. But I tend to bristle a little bit when I see some headlines that sound like, oh, we should panic because because an AI firm is going into debt.
Sure.
All great American companies have a certain amount of debt financing. It's a very healthy way to organize one's capital stack. So that by itself isn't a negative signal to me. What is a negative signal to me are the very deep existential questions about whether these expensive American frontier models are going to be the main suppliers of reasoning as a commodity when China can put out these cheap open source models.
Does that mean when these stocks IPO, OpenAI, Anthropic, at already very lofty multiples, that they're maybe not as attractive right now to actually own?
Well, look, I think they're at lofty multiples because no one else who's ever IPO'd has had the kind of investor confidence in their cash flow paths, right? And to be very clear, I share the confidence that these are going to be transformative entities. But when you're trading at 100x sales, there's a lot of daylight between that, between optimism and that kind of multiple, right? And it is more uncertain than the cash flow paths of historical IPOs. And that does lead to some downside risk.
All right, Eric, we're going to have to leave it there. It's so great to get you on. Please come join again soon. That is Eric Van Nostrand of Lazard. And let's get a check on your equity market about 9 minutes into your trading day. And we are moving higher, pretty even breadth to the upside and downside. Leading us higher is a rebound in the Mag 7. So you have Amazon at the top of the pile in terms of how many points it's contributing to the S&P 500, adding 7.6 points. The S&P itself is up about 51 points. A really good prime day. We're going to talk about that in a bit, but it might not just be that. Again, it looks like just mass buying in the Mag 7s that have been beat up and are down more than 10% from their peaks. So Alphabet, Microsoft, Broadcom, Nvidia, Meta, Apple, all those names having a good day. Interesting to see chip stocks, another very not so good day. Micron down 3.5%, as is Intel, SanDisk on news, maybe not on the news, but maybe related to the news that SK Hynix and Samsung are going to spend something like $800 billion over the next few years building out some of their capacity. Verizon announcing a deal with BT, but also having results. They're falling alongside AT&T, and some healthcare companies not doing well either. Healthcare has been outperforming the S&P 500 by the greatest degree since 2020. So when you look at the individual sectors, again, communications, that's at the top of the pile because that's where a lot of those Mag 7s live, up 2.4%, followed by consumer discretion and infotech at the bottom of the screen, materials, real estate, and utilities. So some bond proxies having a not great day. Coming up, Comcast soars on plans to split into two companies. It creates a whole new media firm. That's coming up next. You're watching Bloomberg Open Interest. Ten minutes into your trading day, and we are moving higher. Even though Micron is down, the Philadelphia Semiconductor Index is fighting for gains. The Nasdaq outperforms as the Mag 7 dip buyers come in with some force, and the S&P up 0.8% after 5 consecutive days of losses. Let's get you some top calls. Here's Bloomberg's Isabel Lee with some of the sell-side action this morning. Isabel.
Hi, Dani. First up, we're looking at Citizens. They're starting Six Flags coverage with a market outperform rating, saying that the theme park operator is poised for a turnaround. The firm sees the new CEO unlocking value across the portfolio, dividing attendance growth, and strengthening the balance sheet. Next up, Philips Securities. They're cutting Saleforce, saying growth is slowing despite its early AI lead. So the firm says AI revenue will probably be too small to lift overall sales for several years. And finally, we're looking at Seaport Global Securities. They're upgrading Warner Brothers Discovery's, calling it a buying opportunity as a deal closure risk around Paramount Skydance eases and as regulatory approval moves quickly. Those are your top calls. Dani?
Isabel, thank you very much. Let's stay in the world of media deals. And Comcast is splitting up to create a new media firm next year. It will separate its NBCUniversal and Sky Group segments into their own company, separating it from the telecom business. Bloomberg's Leanna Baker joins us and covers M&A for Bloomberg. This feels like an effort, a years-long effort that Comcast has been going under. Of course, they've already spun out some other their media businesses. Did this always seem like the plan for them, to just get telecoms to stand alone?
It was definitely something we've been chasing for a long time. We couldn't quite catch the announcement. No one broke this big news that they're splitting. But it really is years in the making. This is the trend right now for media companies. It's not just Comcast. Before Warner Brothers sold to Paramount, they were going to do a split. And it just feels like every few years, companies decide to spin off to grow, get slimmer to grow. And it's something we're seeing across all industries, not just media. Although it is interesting, we're seeing all these media deals this week when Sun Valley kicks off next week. So I wonder what we're going to be talking about then.
They're going to have run out of
now.
deals.
Right.
And I know your team's going to be there, so I'm excited to hear what does come from it. But is part of this just that these media assets are just unloved? You want to spin them off, not have them under your roof? I mean, Versant, thank you.
So
Versant's down like 21% since they've spun off from Comcast.
I think people are still trying to understand that stock, but they obviously have assets that we know, like Sci-Fi and the Golf Channel, and they're trying to build out the company through some acquisitions. And I think that's something that Brian Roberts, who's going to be the chairman of both Comcast and NBCUniversal, has said today on the conference call. He wants these companies to keep growing. So it's not just about slimming them down. It's about directing them towards growth in a slimmer way, losing that conglomerate discount. But something we see in M&A is that every few years you go from scale to slimming down. So maybe in a few years they could get together again. And I saw there was even some chatter, could NBCUniversal merge with Versant? So you never know, how the trends are in consolidation.
Well, in terms of getting bigger, not necessarily getting bigger, I guess just partnering up. Your team has also been on the story about Verizon and BT, the UK telecom provider. What sort of arrangement are they reaching together?
The exact same themes as this Comcast split. These assets were unloved. Verizon's new CEO, Dan Schulman, who came from PayPal, he's been clear that they want to make divestitures. They want to slim down things that aren't growing as fast. And British Telecom has also for years been trying to deal with their international business. They had been approaching different competitors. So this is a way to sort of do a bespoke deal. You combine these in a 50-50 JV. That's really hard to do in M&A. Verizon's going to have a payment to British Telecom, and it's supposed to create this bigger international company focused on business customers. And it's a way for these companies to get this off their balance sheet and create a new entity.
Just finally, Leanna, I know that there has been a little bit of discussion, some chatter about SpaceX and Charter with a partnership, a mobile phone partnership, again, in the world of telcos. What might that look like?
It kind of got lost in the SpaceX IPO, this whole Starlink business, and we're waiting to see how we're going to get cell phone service, from SpaceX. So I think this Charter tie-up, which is not an M&A deal, it seems to be a partnership about telephone service, that could be driving Charter's stock today. There was also another satellite deal. Iridium got acquired by Rocket Lab today. So there's a lot of interest in this convergence between spectrum, mobile phones. But as you know, we don't get our cell phone service yet from satellite,
right.
Maybe when you're on a plane. So this is all very futuristic, and it's something to watch whether cable companies could maybe team up for this next stage of growth.
Just on a very broad macro kind of deal lens, because I thought about this because SpaceX does their cursor deal with stock, and I remember Ryan Gould was on the Deal Show talking. I think it was a Qualcomm deal, maybe that was all stock too.
Yeah, we broke that modular.
Exactly. So with all of these, it just feels like a lot of these deals are being based on all stock deals. And I just wonder if you continue to see some market selling, especially around tech names, do you anticipate that to slow the pace? How much of the deal activity we're seeing is just because markets are at an all-time high and companies can afford to do this?
One of the reasons there's going to be this rush of IPOs is that once you have currency, you could do more deals. And even through these spin-offs, now, all these companies have the currency and stock to do deals. So it's something we're watching. But you'll still see cash deals. You'll still see private equity deals or cash and stock deals. Remember those?
Yeah, those old things. Anna, thank you so much for joining. Looking forward to seeing you again on Wednesday. I hope I will, because every Wednesday, Leanna and the news team joins me on Bloomberg Deals. That's at 12 p.m. New York time. Coming up on the show, the American consumer is still spending at least on Amazon. We're going to break down what this year's Prime Day says about the retail outlook. That's coming up just after this break right here on Open Interest. You're watching Bloomberg Open Interest. Let's get a check on your equity market this morning, about 20 minutes into your trading day. And we have a rebound on our hands after 5 consecutive days of selling last week. The first time that's happened all year. It's being led by the NASDAQ, but this is, I don't know, maybe some of this is also just quarter end rebalancing, and that's some of the weirdsies that we're seeing. The Russell 2000 had been outperforming for much of the past quarter. That starts to ebb. We're down 0.3%. Equal weights also had a pretty good month. Bloomberg dollar spot, little change. Brent crude, that's up by 1%, but we're still below $73 a barrel. So perhaps we can ignore some of the Iran headlines, just given that. Of course we can't, they're very important, but maybe having less of an impact on this overall market. Nvidia, that has a good day, as does SpaceX, up 2%. Chip stocks still getting hurt. I believe the Philadelphia Semiconductor Index as a whole is up, but the stewards of the chip trade, Micron and SanDisk, are both down 4%, 5%. We learned that in South Korea, SK Hynix and Samsung have some pretty big spending plans over the next couple years, hundreds of billions of dollars. Apple's doing all right, up 0.3% after the whole brouhaha last week about them raising prices because of these companies, because of how expensive memory is. And Amazon leading market gains, up 4%. So Mag 7 is rebounding, but additionally for Amazon, to help it out this morning, online spending reaching $26.4 billion during their Prime Day. Again, it's just another sign that consumers remain resilient despite lingering economic uncertainty. For more, Bloomberg Intelligence senior retail analyst Poonam Goyal joins us now. Poonam, can you just break down the numbers from us? What did we see from Amazon's Prime Day?
Sure. So Amazon's Prime Day last week, June 23rd to June 26th, sales were up $26.4 billion. That was what online sales were throughout Amazon Prime Day, and that's up 9.3% from last year. So encouraging numbers out on Prime Day shopping on those 4 days. That said, consumers did pull forward spend. So, some of that increase came from everyday essentials, came from back to school spending, and also came from just people looking for values. So they had a list going into Prime Day. They knew what they wanted to buy, and they took advantage of the deals that came about, whether it was from Amazon or from Walmart or from any other company that offered deals last week.
So is that a good sign for these companies or for the overall consumer? In other words, if you're spending on deals, is that maybe not a bad sign for retail as a whole because consumers want a deal right now?
Yeah, so it's a mixed message because it's great that consumers are spending, right? That's a good sign. But the fact that consumers are focusing on deal spending is showing that there is some pressure on the consumer, especially the low-end consumer, where they are strapped for cash, where they are bargain hunting more. So it kind of tells us that the value message is quite clear from the consumers, that they are shopping when there are deals, when there are discounts. So absent deals, are they going to pull that plug? Unlikely, especially if they're a low-end consumer.
Does that mean that some of the discretionary spending, Poonam, has pulled back in favor of some of these everyday essentials?
It absolutely has. Once again, you have to tier it across the different consumer buckets. At the low end, yes, discretionary spending has pulled back. At the high end, it hasn't. The high-end luxury consumer is still spending, and they're spending like, there has really been no impact on their wallets.
Do you expect that to change at any point, considering that income growth is still there, but it hasn't necessarily kept up with what we're seeing in inflation?
I think over the next 3 to 6 months, as we look into the back half, particularly for the two major spending events, back to school and holiday, consumers will be more deal shopping. But I do think that unless there is a major change in employment levels, which is the number one catalyst that we look at to kind of gauge if consumer spending will tick down, we think the consumers will spend, but just will be more mindful. Once again, outside of deal-driven events, we think spending could be slowing.
Poonam, thank you so much for joining us as Poonam Goyal of Bloomberg Intelligence. Coming up in the next hour, we're going to catch up with Moneta's Aoifinn Devitt, sharing emerging trends in the AI trade that seem to be unseating the Mag 7. And we'll speak with Monte CEO about the agriculture business and ventures into canned goods. All of that is coming up in hour 2 of Bloomberg Open Interest. 30 minutes into your trading day. Welcome to Bloomberg Open Interest. I'm Dani Burger. We rally this morning after 5 days of losses. Coming up, chip stocks fight for gains as South Korea unveils a major AI spending push. Elsewhere, the U.S. and Iran agree to halt attacks after days of escalation over the weekend. Talks in Doha are now set for tomorrow. Plus, a big week ahead. Fed Chair Kevin Warsh set to speak Wednesday at the ECB forum in Sintra ahead of Jobs Day on Thursday. You did not read that wrong. It is Thursday Jobs Day, considering we are off on Friday. Joining me now at the desk is Michael McKee, Bloomberg's international economics and policy correspondent. And I go to Ian Lingen, who said, really, did we have to have this on Thursday? Couldn't we have just done it on July 10th? I mean, it is a busy week for it just being a holiday-shortened one.
It is a very busy week. The first week of the month is always crammed with economic data that is probably the most important of the month. And then we get the holiday. So we get a very busy Thursday where you have jobless claims and the jobs report and also factory orders. But also Wednesday's going to be very busy because we get ADP, we get ISM, and we get the Sintra conference, the ECB's version of Jackson Hole, at which Kevin Warsh is speaking, although he's on a panel with 3 other central bankers. And the theme this year is helping Europe divine its future. So at this point, you got to figure he may not have a lot to say to offer to us at this point.
Even so, I mean, it's a market that's been used to 15 plus years of divining how it should think about macro data and how the Fed will react based on literally what the Fed says. I just wonder, how big of a risk is it that we take everything that Kevin Warsh says and still apply that lens to it?
Well, it's hard to think that we won't, because the markets are so used to that at this point. The idea is that what matters to the investor is the level of interest rates. So you're always going to be trying to figure out what the level of interest rates are, and you're going to be thinking about where the Fed's going to put them. So I don't think Kevin Warsh can put that genie back into the bottle. It's still going to be something we're always looking at for some sort of guidance in what happens.
Fair enough. I mean, is this a Fed, though, that the jobs data coming this week is not less relevant, but has kind of taken a backseat? It does feel like we've had a lot of Fed officials recently, Kashkari most recently, just still harping on what inflation is doing, even though we see the price of oil still around, $72 a barrel.
I was talking with one of our old friends in the oil business, oil analysis business this morning, and she's telling me nobody knows what's going on with oil at this point. But what we have seen is inflation in services industries that has been sticky, and that's why they're going to, at least at this point, still lean towards raising rates. Now, whether they do or not, they're probably not going to do it in July. So we'll see what the economy is doing by September.
All right, Mike, thank you very much. Bloomberg's Michael McKee on the very busy week ahead. Joining us now is Aoifinn Devitt, Global Wealth Managing Director at Moneta. Aoifinn, how are you thinking about this week? It's a holiday-shortened week, and then right before we go, we're going to get jobs data, and right before that, we're going to have the Sintra panel and hear Kevin Warsh speak internationally for the first time as Fed chair.
Well, as I'm coming to you from London, where we're all just cooling down this week after a very oppressive heatwave week, where we had a very unproductive week. So I'd say we're trying to pick up a little bit of lost steam there. In terms of markets, clearly they are going to be trying to work their way through what was, I think, a little precursor of what we could see if we get the same concerns around AI surfacing again. I think South Korea was a perfect precursor as to what can happen when you have particularly concentrated markets and everything riding on a few trillion-dollar stocks. Clearly, that's much more concentrated than what we would see in the US. But we can see that equity markets on the whole are going to be more volatile. And we can even see that in the reaction, the relief reaction today.
Markets are more volatile. What does that mean for how you should be looking at what you're holding? When you get a sell-off in Mag 7 like we have, is it a dip buying opportunity, or do you need to stay on the sidelines just given some of the chop that these markets are experiencing in the biggest companies?
The old advice about staying steady and really staying the course, trying to not be tempted to just take action. What we can see, and even from some of the headlines today around some of the technical factors in markets, we know from the SpaceX IPO just how much retail investors are participating here. Now we have additional information about option volume, about leverage ETFs, about just that leverage that's creeping into the system. This is really, the stakes have got increasingly higher for investors as this kind of activity takes hold. So I would say trying to call a bottom, trying to bottom fish, or even to be too cute, I suppose, about exiting and entering markets, that's where the danger lies today. Stay diversified, stay outside the US, even though it may not look that attractive with a strong dollar, in terms of keeping that exposure in international, and make sure it is well diversified across sectors.
How much of this rotation do you think is real, Aoifinn? Last week, last week, healthcare, the healthcare sector in the S&P gained 8%. It's its best 5-day stretch since June 2022, at the same time that tech was coming under a lot of pressure. The equal weighted has also outperformed to the greatest degree since 2020. Is this real, Aoifinn, or is this just a strange quarter as we start to divine exactly the return on investment for some of these AI stocks?
Just as we're trying to take stock after the frenzied heat wave, we are also, I think, taking stock in markets in terms of having that balance now make its way across the portfolio. So to that extent, yes, I think the rotation is real. Does that mean it will rotate out of tech and we'll see a dramatic drop there because of flows? I don't think we're going to see the flows come out because of rotation. Remembering we have over 8 trillion in money market funds sitting on the sidelines now. What we could see, though, is jeopardy to earnings and to demand. If that demand picture starts to fracture, then we will see some significant rotation out of tech, some profit taking. There have been meaningful profits there. But for now, as the holiday looms in the US, I think that is all optimism that we're seeing.
Some optimism, some portfolio rebalancing, maybe ahead of the month. Even what about the narrative, though, when it comes to these AI spenders, that the hyperscalers now have to contend with cheap models, tighter corporate budgets, regulatory constraints? Do you think those continue to weigh down on these large names?
I think we can already say that many of these models are coming of age, in the sense that we've seen a differentiation, different use cases. We know that each is taking a lane to some degree. And that's when participants tend to decipher between them and discriminate and say, well, which ones are really necessary? So this is going to be a long process that probably, honestly, is not going to take place fully over the summer. We will probably still have not that full participation in engaged discussion around where and when demand will fall here. So I think there's going to be some fog around that for the course of the summer, but we are going to start seeing demand make its, and as well as the reflection on supply and components be reflected. So I don't see that immediately, but there will be some discerning going on by consumers and investors alike.
So in the meantime, we continue to get headlines around the weekend of a tit for tat of Iran, of U.S. striking on each other. And then just before market trading, we get headlines that talks will occur. It seems to be a now replay, a deja vu, that headlines happen when markets are closed and things seem to settle when they don't. Even do they still hit your radar at all? I mean, the price of oil, despite all of this, is still around $70 a barrel. How much does headline risk register for you?
Well, I say the oil is relevant because it has really been an implicit rate hike. We haven't seen central banks need to hike rates because essentially there has been a tightening going on with this pending inflation that has not really been going into the rearview mirror as it should have. So now we're moving from oil being the reason for that rate hike to components. And we've seen technology rise by 20% in the case of Apple prices just last week. That is, I would say, in the not so much discretionary expenditure, but more like a must-have for many consumers, their cell phone. Maybe not the Apple latest model, but certainly there is need for that. So all these price rises are definitely going to impact the consumer, which, as we know from your previous guest, is starting to feel the pinch when it comes to where they're spending. So it may not be the top-end consumer, but the bottom-end consumer. So for all these reasons, I'd say oil price, whether it's oil price or the Apple price, yes, it has a bearing on inflation. I don't think geopolitics and the Strait of Hormuz has as much bearing as we used to think. It really comes down to the kitchen table issues of affordability and price.
All right, Aoifinn, we're going to have to leave it there. Thank you so much for joining us, Aoifinn Devitt of Moneta. Now, we are awaiting a variety of Supreme Court decisions this week before the court adjourns. It's set to rule on two of President Trump's most audacious gambits, his bids to oust Fed Governor Lisa Cook and to roll back automatic birthright citizenship. We did just get a ruling from the Supreme Court, not on those, but rather around mail-in ballots and whether they can arrive after Election Day. It's a decision that preserves grace periods in 30 states, so saying that that is indeed allowed. Joining us now from the Supreme Court is Bloomberg Washington correspondent Tyler Kendall, and still with us around the desk is Michael McKee, Bloomberg's international economics and policy correspondent. Tyler, let's start with you. What ruling did we just get from the Supreme Court?
Yeah, Dani, the first of the day, as we're expecting to get 3 or 4 cases as we await some of these really high-profile ones. But the Supreme Court ruling today that the federal election law does allow mail-in ballots to arrive after Election Day if they are postmarked by Election Day and arrive within a 5-day grace period. This does actually mark a victory for the Democratic Party that had challenged a Republican bid to reverse this type of process here, and actually saw some of the conservative justices get on board with some of their more liberal colleagues, including Amy Coney Barrett, as well as the Chief Justice John Roberts. Now, typically in Supreme Court fashion, the most contentious cases are saved for last. Today is the last scheduled day here at the Supreme Court, though we are expecting at least one more day to be added either later this week or next week to deal with these cases that you mentioned when it comes to the Lisa Cook case and the birthright citizenship case. And Dani, both of these cases have two sort of underlying themes to them that connect them together. One is that it marks the Trump administration trying to overturn long-standing precedent. And the second is that the justices appeared very wary of the Trump administration's arguments in both of these cases. That doesn't mean it's a done deal, though. They just gave us these signals. We're waiting on those confirmed cases. One more for your radar, that's Trump v. Slaughter. That is that case where the Trump administration may have a little bit more success. The justices appeared a little bit more amenable to their case in that particular case, which has to deal with the Trump administration trying to remove the last Democratic commissioner on the Federal Trade Commission.
Well, this isn't the only election case as well that we're getting. Mike, I know you're also keeping your eye out for one about independent PACs. What else might we get from the Supreme Court?
Well, this is usually they often, not usually, but often put cases together that are in the same kind of category. And that one is the Republican Senatorial Committee versus the FEC. Basically, what the law says is national political parties may spend in coordination with their candidates only certain amounts of money. If you get these national parties and you get the independent PACs who are spending a lot of money, they're not supposed to coordinate with campaigns. And this is a challenge to that by the Republican Party. So we'll see if the court says you can do that. The Mississippi case is perhaps a little bit more important in one sense because 30 states do allow mail-in ballots. Not all of them have a requirement that you can count them afterwards. But this case turned on just basically the idea of what is election day. There's a federal law that says you have one election day in the country and everybody must observe that. And the Republicans challenged that, saying that that meant you could only count ballots that were cast by that day. And Mississippi said, well, these ballots were cast, they just didn't arrive on time. So that's not a constitutional decision, it's a legalism, and that could be changed if Congress wanted to change the law. The independent PAC one, I mean, after we got Citizens United several years ago, we saw campaign finance exploding and a lot of influence from big PACs and big corporations. And this could have a similar kind of effect, not as big, but a similar kind of effect if we get that one. The other one that we've just gotten is the Chatry geofencing, whether or not law enforcement agencies can request the cell phone records of certain towers to see who was there when a crime was committed.
Michael McKee, our international economics and law correspondent these days, too. Thank you so much for joining. And, of course, to Tyler Kendall as well. Let's get a check on your markets this morning, just under an hour into your trading day. And we do pair some of the gains that we had seen. The NASDAQ now down 0.1%. Some real nerves around it's the chip trade. Micron is under pressure this morning, as are some of the other big chip stocks. The S&P, though, still logging gains up 0.1%. The dollar versus the yen strengthening to quite a large degree. The yen sliding to its weakest level versus the dollar since 1986. And Brent crude still trading below $73 a barrel. Let's get a look at some of the other movers on our radar this morning. With that is Isabel Lee. Isabel.
Hi, Dani. Let's take a look at some single stocks moving at this hour. First up, we're looking at, well, first of all, watching chip stocks after Friday's huge sell-off, which saw the Philadelphia Semiconductor Index drop as much as 5%. So South Korea is planning an $800 billion investment from SK Hynik and Samsung to maintain its standing as an AI hub. So you see the chip stocks all down in the red. And we also have Comcast announcing plans to spin off NBCUniversal and Sky into a new publicly traded company. This would separate it from its cable TV and internet operations. You see the stock popping there as much as 8%. And Verizon and BT agreeing to merge their international units, creating a business with a combined yearly revenue of about $4 billion. The stock is down by more than 5%. Back to you, Dani.
Isabel, thank you very much. Coming up on the show, the private credit industry is pumping billions of dollars into buy now, pay later. We're going to discuss the latest big take. That's coming up next. Breaking news, the Supreme Court releasing two decisions in tandem. First, the Supreme Court has let the Fed's Lisa Cook stay in the job for now, a very closely watched case. Alongside that, the U.S. v. Slaughter, that being decided, that expands the president's power to fire a top official at an independent agency. Let's discuss both of these. Bloomberg's Michael McKee, international economics and policy correspondent, joins us now. Mike, let's take these one by one. Let's start with Lisa Cook. What has the Supreme Court decided?
Basically, the Supreme Court is carving out an exception for the Federal Reserve in the powers that the president has to decide who runs or who can be on these boards. The administration tried to fire, the president tried to fire Lisa Cook because it was alleged that she had committed mortgage fraud, and there's no proof or evidence of that. She sued to be able to stay on the job while the courts were deciding whether or not she committed any kind of crime, and it's made its way all the way to the Supreme Court. The Supreme Court now says that she can stay because if the administration's argument had been accepted, it would transform the Federal Reserve's for-cause protection into an at-will employment, which is a leap out of step with the statute that Congress enacted in forming the Federal Reserve, and it would make the nation's tradition of central banking no longer protected from political interference. So the court upholds the Lisa Cook's ability to stay in her job. Now, this could still go through court if the administration wanted to pursue it and try to find her guilty of something and then get her out of there.
Right. Okay, so that's an important caveat, that for now. Mike, we also have the question over whether Rebecca Slaughter was able to stay at the FTC and the Trump administration firing her. And again, the Supreme Court here having, I suppose, the opposite decision, saying that indeed the president is able to do that.
This has been something that's been going on for a while with the administration because the president has tried to fire a lot of heads of these independent agencies. And the court is finding in this case that the president does have that power. It sort of underscores the administration's argument, and it kind of goes where the Supreme Court has been leading in terms of what they call the unitary executive, that the president is the head of the executive branch and therefore has the ability to get rid of anybody who is on any of these commissions. So this could affect a number of other different committees, independent agencies, including the FTC, the SEC, the National Labor Relations Board, the FCC. And so this is an important ruling that gives the president a lot more power than than previous presidents have had, put it that way, in determining who is on these committees. The argument had been that the FTC did a lot of quasi-judicial work, which meant that it was not under the control of the president, and the court is saying it is under the control of the president. And this goes back to something you've probably heard a number of times, Humphrey's executor,
of course,
which was in the 1932 case where Mr. Humphrey, who was a member of the FTC, was fired by President Roosevelt, and he sued to collect back pay and to be reinstated. And the court ruled after he died, and he died before the court could rule, and they ruled that he was still a member of the FTC, therefore should get his back pay. The executor of his estate filed the lawsuit, so it became known as Humphrey's executor. And we'll have to dig into more on this, and I see an expert sitting next to you who could tell us more about what it may mean in terms of this Humphrey's executor, which has been a foundation for the administration's ability to do things.
1935, and let's bring in that expert. It's, of course, our very own David Weston. Boston. I mean, well, what is your initial reaction to these, David?
Not surprised. I mean, I think that the Lisa Cook thing was a very hard, tough putt, as you might say, to get there. And we saw that even in the oral argument. A lot of the justices were very skeptical about this. They had several burdens they had to overcome. Including whether this was for cause at all, why they didn't give her notice, an opportunity to talk about it, why they needed to get her out of there so quickly. And the fact, in fact, that the courts let her continue to sit and continue to participate in decisions for that long was sort of an indication that they were not in a big rush to change it. Now, I have to say, as far as I can understand it, this does not mean necessarily that they won't go back down to the lower courts and actually make the charge that she's not qualified and prevail. It doesn't mean that she's out of the woods yet, but it certainly sort of takes care of the Trump administration's arguments.
Right. She can stay in office essentially as this gets played out. Let's also go live now to the Supreme Court, where Bloomberg Washington correspondent Tyler Kendall is standing by. Tyler, again, just sum up these cases for us, and to what degree this is a landmark case that does alter some of the once independent agencies in the U.S., and how big of a win this is for Fed independence.
Well, Dani, as you've been going through, this is considered to reinforce the central bank's independence, but neither of these decisions are actually considered surprising, right? We got these indications from the justices during the oral arguments. Earlier this year, I was here back in January, where we really saw some of those conservative justices cast doubt on the Trump administration's bid to oust Lisa Cook for a few different reasons. And we're going through this ruling right now to see which of those threads they picked up on. But one really important one was whether or not Lisa Cook actually was given the right to respond to the allegations before she was removed. The second that we're watching closely for are any details when it comes to whether or not these justices took into account what's known as the equities of the case, essentially the broad-ranging impacts that this could have on the economy. And I bring that up because this Lisa Cook ruling is 5-4, and that included conservative Justice Brett Kavanaugh voting against the administration here. And during the oral arguments back in April, he brought up this issue of what this would mean for the Fed's credibility going forward. Back in January, he said, in part, quote, that if Lisa Cook was removed, it would weaken, if not shatter, the independence of the Federal Reserve. So it's very clear that those equities of this case, those broader ranging impacts, were top of mind, including when it comes to this Cook case for these justices today.
Mike, let me bring you back in on this FTC case and what you're looking at.
Yeah, I've been reading through the decision, and basically it follows what we anticipated the court would do, given the kind of questions that were asked when it was argued before the court. Basically, the court saying that the Humphrey's executor had outlived its usefulness, and their decision is that although it is up to the Senate to decide whether to confirm those with whom the president would prefer to work, neither Congress nor the courts may saddle him with those with whom he cannot work. Subordinates who exercise the president's power are subject to removal by him. Then and only then can they remain accountable to the president, and the president, therefore, to the people. So
I do just wonder, David, how much this uproots things for corporate America, of having steady independent agencies for which you could kind of understand the policy you're getting from them. If there is an idea that perhaps they serve more at the president's whim than they did in the past, if that introduces new regulatory risk.
Well, certainly it does, without a doubt. I mean, but if we go back and think about it a minute, if you look at the structure of the Constitution, there were 3 branches, right? Essentially, over time, a 4th branch was developed, the administrative branch. That was not in the Constitution. And yet you built up a lot of authority and a lot of power, as Mike said, some of it even judicial, arguably. And basically what this unitary executive says is, no, wait a second. The Congress can do things. The executive branch can do things. You can't have some 4th branch deciding things. Now, that does potentially insert some uncertainty for corporations, although it depends on the corporations. A lot of corporations have not been very pleased with what's happened administratively, so I'm not sure they're going to be too upset with this. But it's been a long time coming, but I think we have to remember it was not in the Constitution. That was not provided for. It was sort of an experiment, even going back to the 1930s.
At the same time, we are hearing from Bill Pulte, who is now the acting director of the Office of National Intelligence, but started to a large degree what's happening with Lisa Cook. Him saying, I believe Lisa Cook will still be indicted for mortgage fraud. To what degree, Mike, is this still an issue for markets of Fed independence and the White House trying to tamper with them? Or do you think that this case will allow us to push that to one side and move on?
I think it basically allows us to push it to one side and move on because just the timing of trying to indict her and get it to trial, et cetera, probably puts us way into the future, and the Trump administration would be coming to an end. Second, she has not had a chance to make her case yet, and she has, and her lawyers have basically put out some information that suggests there was no crime committed. We've seen the administration try to indict people just for spite, basically, and they might try to do that, but to get a court decision in which you were found guilty and then the president would have a chance to fire her for cause is probably something that is not going to happen. The court does, in its decision, lay out the fact that for cause matters with the Federal Reserve because they have fixed terms and they are basically not officers of the administration.
Tyler, have we seen any appetite? I mean, maybe Bill Pulte, putting him aside, but any appetite from the White House to continue to pursue things like ousting Lisa Cook?
That's a really great question, Dani, because it's definitely been something that we've seen administration officials sort of walk the line on here, because President Trump, for his part, has been, of course, highly critical of the Federal Reserve. But now that he has his Fed chair in place, perhaps we'll see some of that rhetoric temper down, though, of course, he's still been trying to pressure when it does come to rates. But we've gotten some sort of indications from the Secretary of the Treasury, Scott Bessent, for example, as you well know, seeming to indicate that they're okay with Warsh's plans as of now when it comes to rates. Something definitely to watch here, but Bill Pulte has really become the champion of this bid by the administration when it comes to allegations of mortgage fraud. We've seen it against some other political opponents of the president. For example, I'm thinking about the California Senator Adam Schiff as just one other notable example where these allegations have come out against them in a bid by the Trump administration when it comes to political rivals. So definitely something to watch here. But for now, it seems like the temperature may be turned down, but we'll have to see ultimately whether the president's Truth Social tells us that or not.
Sure. I mean, it doesn't prevent the president from launching another ethics investigation, perhaps more of a real one this time, into Lisa Cook. But I do wonder, David, if this does just take some of the heat off the Supreme Court now, or rather the Fed, now with Kevin Warsh at the helm.
Well, certainly. It's a lot harder to try to indict somebody and get a conviction of the supposed mortgage fraud than it is for what the president was claiming is he just had absolute authority to just dismiss people if he didn't like working with them. There's a huge difference between those two. It's certainly, believe me, the one thing I know about it in Washington, where I practice law, is it takes a long time to get anything done in the courts. So we're talking about a long time, if there is any merit to it to be agreed with. And as you know, Mike, there's a lot of different questions about the conduct. The alleged conduct did not happen when she was actually sitting on the Fed. So it's not when she was a Fed member that she did this. There's a lot of questions, the materiality of the whole thing. So I think it really does take a lot of pressure off.
Yeah, and I think the long term is that the Fed president does not have the power to fire somebody at will on the Fed. And by that, we're referring, of course, to Jay Powell, the former chair, who the president doesn't like and wanted to fire. And he was told he didn't have the power to do that by his aides. And Cook was sort of a test case for that. If Cook had been allowed to be taken off the court while her case proceeded, then he could have tried to fire Jay Powell and, in theory, remake the whole court or the whole Fed.
Well, that strikes me as the important point, whether the subtext to all of this is, forget about Janet Cook or even Jay Powell, how many votes does the president have the ability to replace on the Fed? That strikes me as the important thing. His ultimate goal, I think, is to really get the interest rates to where he thinks they ought to be. And the more people he gets to appoint, the more the chances are. So I think that's at least the subtext here that does go back to the independence of the Fed. It's not just whether she made a mistake on her application or did something worse than make a mistake on her application or not.
Lisa Cook is still there. Powell is still there. So he's been largely successful in all of this. But he does have his man in Kevin Warsh there, but it doesn't seem that he's going to get from Kevin Warsh really what he wants. And I wonder if that just doesn't clear this up, if you continue to get more pressure from the president.
That's the fun part now, is we can turn our attention back to what the Fed is going to do based on economics as opposed to based on politics. Well, the interesting thing about the Cook case is the decision by the court is not based, is only partly based on the idea that the Fed is an independent agent, independent of the administration. They also ruled that she would have to have a chance to respond to the charges, and only then could courts assess the validity and sufficiency of the charges to fire her. So she did not get due process, the court is ruling, as well as holding that the Federal Reserve has a different kind of place in the government than the FTC.
Tyler, let me just take it to you for the final word, because it appears that the court is done for the day, but we still do have some consequential decisions on the docket, including birthright. What are we still expecting from the Supreme Court?
Yeah, Dani, 4 more decisions. Birthright may be the most contentious one that we are waiting for. This is typical of the Supreme Court to leave some of those more consequential and contentious decisions for last, as we try to figure out exactly which day the Supreme Court is going to set for the very last day of the term. When it comes to birthright citizenship, I was here back in April when President Trump came here too. He became the first sitting president in modern history to attend oral arguments. That is how central this bid by his administration to overturn automatic birthright citizen is to his immigration agenda. But Dani, as of now, it doesn't seem like the justices are really in favor of his administration's push here. That doesn't mean that they're necessarily going to rule against him, but those were the signals that we're getting, and it really rests on 5 words of the citizenship clause of the 14th Amendment, that essentially anybody who's born in the U.S. and is, quote, subject of the jurisdiction thereof becomes a U.S. citizen. We're going to have to see where this goes. The Trump administration says that that provision should not be applied very broadly, whereas the opponents here, the ACLU that sued against the executive order, says that this is long-standing legal precedent.
Tyler, thank you very much for that coverage. That is Bloomberg's Tyler Kendall at the Supreme Court. And thank you to Michael McKee, Bloomberg's international economics and policy correspondent, and David Weston, host of Bloomberg Wall Street Week, which you can catch every Friday, 6 p.m. in London and 11 p.m. in London, 6 p.m. in New York City. And again, just to recap, 2 Supreme Court decisions allowing Lisa Cook to stay in the Fed job for now. She does not need to immediately be ousted, though investigations could continue. And at the same time, allowing the Trump administration to let go one of the top officials at the FTC, remaking the administration's power when it comes to independent agencies. Let's get a check on your equity markets this morning. It's an hour into your trading day, and a volatile one it's been. The Nasdaq now up. It had been sinking earlier. It was down about 0.1%. The S&P moves higher by 0.7%. Semis are down. Micron is down a lot this morning. Brent crude, that moves higher by 1.4%. Let's get a look at some of the other movers on our radar this morning. With that is Isabel. Hey, Isabel.
Hi, Dani. Let's get a look at some of the single stocks moving at this hour. Of course, we have to talk about SpaceX. They're set to join the FTSE Russell indexes today, including the large cap Russell 1000. So Bloomberg Intelligence estimates that this will spur buying worth at least $5.4 billion. To see the stock, they're up by just 0.5%. And it's important to note that the float is not a huge number, but still, this is big news for a lot of the investors. We're also looking at Microsoft. Shares are heading for their worst month since the dot-com era, as investors fret about how the software giant will fit into the AI world. But for now, they're kind of cheering. They're up by 0.7%. We also have data from Adobe showing that online spending across retailers in the U.S. reached $26.4 billion during Amazon Prime Day. I actually forgot to shop during Amazon Prime Day, but this is another sign that consumers remain resilient. You see the stock up there by more than 5%. Those are your morning movers. Dani?
I literally same. Every single year, Isabel, I forget. But like, what do I don't need another robot vacuum. I don't even use the one I have now.
I tell myself I'm going to buy, then I forget, then I regret it, then I wait the next year.
Yeah, you just like panic buy Amazon stuff at 2 a.m. in the morning. Anyway, Isabel, thank you very much for all your work this morning. Coming up on the show, one of America's most iconic food brands is coming together. We're going to speak with Del Monte CEO Mohammad Abu-Ghazaleh about the company's next chapter right after this commercial break. You're watching Open Interest. After nearly 40 years apart, the Del Monte brand is back under one roof. Today marks the company's first day trading under new ticker DMC. Joining us now is Del Monte Chairman and CEO Mohammad Abu-Ghazaleh. Mohammad, thank you so much for joining. And so you have the packaged and the fresh components of the business now coming back together. Well, why do this after 37 years?
Well, it took some time for us to bring it back together. I mean, it was like a dream, a mission, let's put it that way. And I would be thankful to God that we were able to reunite the brand again after all these times. I mean, it was broken up, in 1989 and in pieces. We acquired the fresh Del Monte in 1996. And then we acquired Del Monte Food Europe, Africa, and Middle East in 2004. And now, just recently, we've been able to acquire the mother company, which is Del Monte Food.
Now, it's been a huge journey you've been on, but so much in the food market. I mean, we can talk about the supply chains in a moment, but just the consumer demand part of it has changed so much. And I wonder if putting these together, if you're also writing this trend of people who want, fresh food, less chemicals, and how important that is to the business to have that fresh food component within the same roof.
I think we are a unique company in terms of having the fresh and the consumer goods and non-fresh, so we can do a lot of cross-merchandising, marketing, and as historically well known, Del Monte is a very trusted brand. I mean, we do have the highest quality in the market.
How has consumer demand been? Are they willing to pay up for high quality right now, or is there so much pressure that maybe they're more likely to reach for the canned tin of pineapples rather than the fresh pink one?
Well, you have both. You have both consumers. You have the one that can afford to buy a pink pineapple or fresh pineapple in general, and you have people that will go for the canned goods. So we do cater for both sectors of the economy.
Wait, I know another big impediment or headwind that you've been dealing with in your first quarter. You specifically pointed to the Middle East conflict and the Strait of Hormuz and some of the pressure that's put on the supply chain and what that's done to profits. Are you seeing anything that looks like a normalization as we start to see some ships flow through the Strait of Hormuz?
Yeah, we were impacted mainly by the cost of the fuel, transportation, supply chain, like materials, fertilizers, and paper, and things like that. But I believe that this is going to ease up as we go forward, and as the oil prices has gone down. So we believe this will be, hopefully, in the next few months.
Well, you also have deep expertise in the Middle East as well, given your background. And the president has talked about that. He wants Iran to use the unfrozen assets to buy American agriculture. I wonder what you think of that deal and whether you think something like that might be likely, considering these are two worlds you know very well.
Well, I believe that Iran needs, grain and needs food for sure, whether they buy it from the U.S. or somewhere else. And I think normalization of relations and buying from the U.S. will be good things for both countries. So I hope that this will happen.
I mean, your business is one that is very exposed to politics. The farming sector is one that the president cares a lot about, or presidents historically have, but affordability in the grocery store is one he cares a lot about. And in the Middle East, it feels like it is, issue after issue after issue that you have to navigate. How have you been navigating that over the past couple of years? Has your approach to D.C. changed at all?
Well, we've been navigating this for the last 30, 40 years, so it's not something new to us. And we can, we are agile and we can manage, as these headwinds come in our way. We have challenges, so we need to just adapt to them and find a way.
How do you manage costs of fertilizer, costs of energy? How have you been trying to hedge some of that?
By streamlining the business in a better way, trying to tighten the belt, and on other cost centers, you can save on marketing a little bit, you can save on other things that will not impact the business in any significant way. So we survive.
And at the same time, you're doing some interesting work when it comes to pharmaceuticals. I think you have an application about treating pancreatic cancer cells on pineapple-derived extracts. Did I get that right?
Where did you get that
Okay,
from?
no, perhaps not. You have no patent filings around that. You do have, though, your pink pineapple.
We have
how much of that is just about it looks really good, and so you get some fun advertising out of that?
No. As a matter of fact, you just mentioned we have been doing some research with a very prestigious university in Europe in the last few years, and we have discovered actual novel bioactive ingredients which are unique and there is no database globally similar.
Right.
So we are patenting. We have patented.
Okay, that's the patent that you're working on. But is this medical applications that could be used for this?
It's mainly, it will be pharmaceuticals, cosmetics, and functional foods, as well as nutraceuticals.
So again, you've been at the company. You're saying, you're ringing the bell nearly 30 years after you first did. And so much has changed. And I just wonder how you reflect back on those 30 years. I mean, the commercial break we were talking about, you're now looking at using AI in some aspects of your business. I just wonder how different of a Del Monte this is than it was 30 years ago.
Oh, much difference. When we acquired the company, it was almost $1 billion. Now we are almost, with the acquisition, will be around $5 billion. We have expanded so much in different parts of the world as well. So it's a completely different world, and I've seen it, when in 1996 we were almost at the beginning, of the tech boom and changes. So I've seen it even before that with no internet, and so it's been an exciting journey, let's say.
Mohammad, thank you so much for joining. Really appreciate your time today. That's Del Monte CEO Mohammad Abu-Ghazaleh. Let's now turn to sports, and Bloomberg has been reporting that former Disney CEO Bob Iger and Thrive Capital founder Josh Kushner are exploring a bid for an NBA expansion team in Las Vegas. Joining us now is Bloomberg senior reporter Randall Williams, who covers sports and co-hosts the Bloomberg Business of Sports podcast. Randall, what could this ultimately look like?
Well, it's my understanding that Josh is discussing making a bid backed by Eternal, which is Thrive's holding company, and that has Bob Iger's involvement. Now, the group of bidders that are interested in Las Vegas is very crowded. It also includes Bill Foley, Magic Johnson has expressed interest, as well as Mark Lazary. So he's just one of many that is going to be trying to pursue a bid. But who knows? Maybe it'll be competitive, and maybe they could come out on top.
Again, it feels like every day there's a new story about X person wants to make some sort of bid for a professional sports team. I mean, this has been ongoing for some time.
Sure.
And I just wonder if it feels like it's picking up pace. And is that just because of where we are in the season, that the teams that have done well are looking for buyers, that we're looking at expansions? Is there something in the water right now?
Well, I think that if you go back a couple months, the NBA announced expansion, and Adam Silver said that he expects a decision by the end of the year. And so PJT Partners, who is the bank that the NBA hired to run the process, I imagine that they would probably give an update at the NBA Summer League in Las Vegas. And so at that time, if you're interested, you might want to be raising your hand right now to say, I want to buy one of these teams in Las Vegas or Seattle. And that is, I imagine, would be probably why Josh and Bob are out there saying that they're interested.
Not that we necessarily know the price of these things, but is it cheaper to buy an expansion franchise because it's untested, or the Seahawks, for example, after they've already won?
I think the market's going to show, because of the fact that the NBA's requirements are a little bit less than in terms of the overall equity that you have to provide versus the NFL up front. The NFL requires 30% of equity by the controlling owner in cash, whereas the NBA is a little bit lower. And so I think that that whoever buys the Seahawks is going to have a lot of money, and whoever buys an NBA expansion team is going to have a lot of money. Now, in terms of what is going to go for more, I think the market is going to determine that based on who shows up.
By the way, because I know with the NFL, it's like private equity can only be in 10% of a team. What are some of the other limitations for these other big franchises like the NBA?
In the NBA, a single firm can have 20%, but a team can have up to 30%. So you could have one team that has two private equity groups, one at 20 and another at 10. We haven't seen that just yet, but it's possible. I think it could be necessary depending on how high the bidding process goes. If you're talking about a $10 billion expansion team, you might want some private equity or some sovereign wealth.
All right, Randall, thank you very much for joining us on this. That is Bloomberg's Randall Williams. Coming up, Goldman Sachs sees copper benefiting from the legacy of the war in Iran. We're going to have our metal spotlight. That's coming up next. This is Bloomberg Open Interest. It's time for our metal spotlight, and Goldman Sachs says copper may benefit from the legacy of the war in Iran, writing in a new note, quote, the Iran conflict ultimately reinforces many of the themes supporting power and metals demand, so more so than oil and gas. Joining us now is Joe Doe, Bloomberg corporate and economic statecraft senior reporter. Joe, how much of this is just about what we have learned about the flow of materials and the vulnerability of it. I mean, this isn't necessarily anything new, but what lessons have we learned over since this conflict began?
Just reinforces the point, right, Dani? I think that kind of what you're getting at. We have known now for quite a long time that there has been a very strong move, especially in China, towards electrification, right? So there's more electric vehicle production, there's more battery production and storage production within China. This is why you've seen major economies around the globe, especially in Europe, saying, hey, we're going to start moving in this direction. What the Iran war did really point out, again, with the way the Strait of Hormuz has effectively been closed, is you can still have energy shocks. And one of the best ways around an energy shock is by having alternative forms of energy. And copper remains the most important raw material in electrification, from grids to power plants to data centers. That's why, I mean, listen, I've covered copper since 2014. And back then we were talking about ore grades declining, and that this would be an oncoming problem for the demand side in the copper space. And now you add a demand that we didn't expect back in 2014, and that really has ramped things up.
It's really ramped things up. At the same time, Joe, it feels like this market cares less and less. I mean, every day it feels like we're ignoring the headlines. I wonder if there is a sense that at some point what's happening in physical markets will catch up to paper markets, and how policymakers around the world are trying to grapple with that, given, especially in the U.S., the midterms are coming.
Yeah, I think there's a lot of, maybe noise is the way to put it. I mean, right now, obviously, there's an arbitrage trade in the copper market that maybe folks who aren't spending their daily time caring about the copper market may not realize. There's a question about what Donald Trump will do about potential copper tariffs, which he ultimately didn't levy last year. So you see a bit of an arb trade there. So obviously the physical and the paper market are not matched up. And as you pointed out, right, these midterm elections do matter, and obviously people trade ahead of that. Like anything else with physical metals, I think just give it a little time. Let's just see how these things play out. And ultimately, these things do kind of get back in sync.
I guess what can be done in the meantime? I mean, I know when it comes to things like chips, for example, you have countries like South Korea investing huge amounts of money into them. Obviously, you've been all over the rare earth story. Just how big of a push are governments making around the world for independence?
Yeah, I mean, it's significant. And you see the United States and a large number of European nations, as well as South Korea, Japan, Australia, all saying, we do think we need an ex-China supply chain on a number of these critical materials, whether it's copper or rare earths. How long it takes to get there, I think that's the real question. In some ways, it does feel like governments are taking risks, right? They're trying to see what might work. They're trying to collaborate. This is one of the things amidst everything we've seen in the past year with tariffs and everything else, that there does seem to be a lot of willingness to work together across the typical kind of allies. And so, I don't know, this could be 10 years, 15 years type of project, but the fact that we are seeing actual movement by governments putting up actual capital does suggest that there's a serious effort underway. How long we get there, I think, is the question.
Hey, Joe, thank you very much for that. That's Bloomberg's Joe Doe. Let's take a look at what's ahead for markets this week, because it is a holiday-shortened week, but it's still a very busy one. Tomorrow, we're going to get the latest JOLTS print alongside consumer confidence. On Wednesday, ISM manufacturing and ADP data. Then Wednesday, it's the first of the big ones. It's Fed Chair Kevin Warsh speaking in Sintra, Portugal, alongside other central bank decision policymakers. Just how much will he even say? How will he keep his cards close to his chest? And Thursday, the June payrolls report. Finally, on Friday, and this is why the payrolls report is on Thursday, U.S. markets are closed for the 4th of July holiday. So, get in all your busyness before then. Markets this morning are rebounding. We're up 0.9% for NASDAQ after momentarily turning negative just about 1 hour ago. The S&P is up 0.7%. Coming up on tomorrow's show, Nimrit Kang of North Star Asset Management, Joanne Finney of Advisors Capital, and the Chuck E. Cheese CEO Scott Drake and Bank of Finland Governor Olli Rehn. That's all for tomorrow. This is Bloomberg Open Interest.